Hello and welcome to the weekly Forex Outlook at XM.com. Next week, traders will be turning their attention to the Fed minutes and PCE inflation data for clues to the dollar's path amid unease over the U.S.'s mounting deficit. In addition, we'll get GDP data out of Canada, the Reserve Bank of New Zealand's policy decision, and CPI figures out of the Tokyo region. I'm Maria Pacherdis, and joining me to discuss all this is lead market analyst Rafi Boyadjian. So Rafi, let's begin over in the U.S., where America's ongoing debt problem is in the spotlight. Can you tell us about the struggle going on in Congress at the moment and what it might mean for the dollar? And also, what are we likely to get from the FOMC minutes of the Fed's May meeting on Wednesday and the upcoming PCE inflation data for April due out on Friday?
Well, Maria, it's kind of good news and bad news in terms of President Trump's tax bill or budget bill. So basically, the vote did finally get through the House, but it was basically, very slim majority, but just one vote, and could be an even tougher battle in the Senate. So from the perspective of the markets, the main worry is that the Republican Party, which is considered to be more opposed to big spending. There were hopes that they would try to tackle the huge deficit problem in the US, which is basically leading to, huge debt mountain, and this could be a big problem in the future. So there are some hopes that potentially when it comes to the Senate, some Senate Republicans might try harder to push for deeper spending cuts because the bill that was passed by the House, basically that's expected to raise the total debt in the US by $4 trillion over several years. And this has basically led to a bit of a panic in the bond markets. We've seen Treasury yields surge high, particularly the 10 and 30-year yields. So should we start to see some, the discussions within the Senate, because of course the vote there is at the earliest, that's not going to take place until the beginning of June. But nevertheless, any discussions until then that, the Senate will probably try to approve a smaller budget. That could be positive for bond markets. We could potentially see bond yields edging lower and the dollar stabilizing somewhat. Although it's a little bit difficult to predict how the stock market would react to that, because it might mean less spending, might mean lower growth. Now, the other thing, of course, is from the market perspective again, is how soon the Fed is going to cut interest rates. Because, of course, we've heard from several policymakers over the past week, and pretty much we're getting the same message. The Fed is clearly in wait-and-see mode. So when we get the Fed minutes on Wednesday, it's probably not going to reveal anything we haven't heard already. Although if the overall tone of the minutes is somewhat more hawkish than the commentary that we've been getting, that could, of course, weigh on stocks, but potentially lift the US dollar. The other focus, of course, next week is going to be the core PCE price index, because we've seen some encouraging signs in the CPI report that's been edging lower. But however, core PCE might not be quite as optimistic. We're expecting core PCE to stay unchanged at 2.6%, and for the headline PCE to come in at 2.2%. Nevertheless, a softer than expected CPI, core PCE numbers might boost rate cut expectations. But the other focus is going to be on consumption, because this is the April data when we got the reciprocal tariffs. So the headlines about the trade war might have basically kept households from spending more. So should we see some impact on the trade war on consumption, that could weigh heavily on the US dollar.
Moving over to Canada now, the GDP report for the first quarter will be released on Friday. Trump's trade war has undoubtedly affected Canada's exports. How much of a slowdown are we expecting to see, and how might it impact the Bank of Canada's policy path and the loonie?
So we're probably going to see some notable impact in the first quarter GDP numbers because, of course, when it comes to Canada and Mexico, the trade war started all the way back in February, like the reciprocal tariffs for the rest of the world, which had obviously the that impact began in April. So we might see Canadian exports taking a hit in February, although there may have been some front loading as well, trying to ship their exports to the US before the tariffs kicked in. So we have to see what the overall effect was. And then when it comes to in the month of March, that's when probably exports took a much bigger hit. This is exports to the US, of course. However, there are indications that exports to other countries potentially surged in March, maybe as a sign of defiance both by Canada and by other countries to Trump's trade policies. So again, it's hard to predict, if the one or how much one offsets the other, but potentially we are looking at a much slower GDP growth for the first quarter. The Canadian economy grew by 0.6% in the final months of 2024. Potentially we could see growth of just 0.2% in the first quarter, and an even weaker number though could basically push up expectations for another rate cut by the Bank of Canada, which is probably going to go on pause at its next meeting, but nevertheless a very bad report. We could see rate cut bets being ratcheted up, and that could be negative for the Canadian dollar.
Turning to New Zealand now. On Wednesday, we'll get the RBNZ's next policy decision. What should traders watch out for there?
So this is a little bit more clear-cut. So although the RBNZ has been pretty aggressive, similar to the Bank of Canada, the RBNZ has more scope to be cutting rates. So they're probably going to cut again on Wednesday. Markets are 90% sure that we're going to get a 25 basis point rate cut. However, we are seeing some signs of a pickup in inflation in New Zealand. We saw in the previous quarter CPI edging slightly higher. We also seen inflation expectations climb somewhat in New Zealand. So even if we do get a cut, we might get a somewhat less dovish tone coming from the RBNZ, and this could potentially be positive for the New Zealand dollar.
And finally, we'll get CPI figures out of the Tokyo region in Japan on Friday. How might this data impact the yen?
So we were talking about bond yields in the US. We've also seen Japanese bond yields being affected by the global rout in bond markets. And unlike for the US dollar, the rise in Japanese yields has been overall positive for the yen. Now, when it comes to inflation, it seems that inflation is still persistent in Japan, yet the Bank of Japan is worried about the impact of the trade war on the Japanese economy. Nevertheless, the longer that we see Japanese inflation stay above 2%, particularly if it holds around 3%, then I think the Bank of Japan will raise rates again later this year, and policymakers have signaled as such. So if we do see Tokyo CPI come in slightly more stronger than expected, or even if it's line, which is that we might see a slight pickup in inflation for the month of May, we could see the yen potentially gain somewhat. Although I think in terms of markets fully pricing in rate cut for the rest of the year, I think that's going to be a gradual process. So any reaction will probably be limited for the time being.
Rafi, thanks so much. This was the weekly Forex Outlook here at XM.com.